We have experienced in the last 1 decade also some expansionary years and some recessionary kind of years. So the combination of both the expansionary period as well as recessionary period is what contributes to a business cycle. So the economic growth is the typical expansionary phase. The economy going through tough times is what is a recessionary phase. And when most of the economies, most of the it's a most common phenomenon to have both the expansionary phase followed by a recessionary phase and again taking up to the expansionary phase. That entire thing is what we typically call as the business cycle. So a typical characteristics wise, if we see during an expansionary phase, we see that the GDP will keep increasing. During that period, the whole GDP probably 9% growth, 9.5% growth, 8.5% growth, very heavy growth rates is what we see as a part of the GDP. And during that period, we see that yes, output, the total output which the country is producing is actually increasing. The employment situation is very good. We can relate to our scenarios probably 5 years back to current, which could give all these solutions. The employment levels will be very good. The consumption levels of the people are very good. They don't mind buying houses. They don't mind consuming to a large extent, and they don't even mind investment. They take risk to borrow money because the economy is good. Right? Even people borrow to buy some houses or whatever it is. They don't mind investments. They don't mind consumption, and that will even because of too much of consumption, it could even result in inflation. All these things are the characteristics of a growing economy. During the expansionary phase, we see all these things to be at a very high layer. And after a certain point, the country reaches the peak in its growth rate. Real GDP probably 9%, 9.5%. It's a constant growth, and that too at a very high level, which where it cannot grow beyond that because it's already above the potential GDP layer. So once it reaches a peak, GDP stops increasing, and that is where we see that it starts decreasing. And when the GDP goes even more below the potential GDP layer, that is where we are getting into a contractionary or a recessionary kind of a phase, wherein all these will start on a declining note now. The total output produced will come down. The unemployment levels will go up. Consumption, people will always be worrying about whether I should buy this or should I postpone this. Because of the future, they are having their own doubts about what would be the typical future like. So that negative thing about the future comes up. So even the investment decisions they put on hold. You see a lot of real estate ventures here, they are never getting finished. The moment the economy takes up a boom, you will definitely find that a lot of people again will start doing the investments in this. The projects will get completed much faster. The growth of the economy goes much higher. So these are some of the things which you can directly use to assess whether the economy is in a expansionary or a recessionary or a contractionary kind of a phase. So once it reaches a trough, that means it has reached the downward point altogether. So from here again economy has to take off itself. It cannot go even more further down. That is where sometimes we see the economists or some kind of analysts typically saying the next year is going to be a good year because whatever has lost, we have the country has performed at its worst in the last 1 year. So probably it's time to take off. So business cycles are always recurring. So recession is not something new for us. It's a continuously repeated kind of an activity itself. But the only thing is they don't occur in regular intervals. Probably in some cases it may take 20 years to from a expansion to a recession. In some cases, within 2 years, you may get a recessionary era. So it all depends on how fast the movement in the growth is occurring compared to the potential. With that equal amount of fast, there will be a kind of a drop also coming up. So they differ in strength and severity. Probably 1929 recession, and after that, probably we are talking about 2008 recession itself, but big, very heavy kind of intensity levels. Of course, though there are so many recessions in between, the severity levels are much different at each of the time period, and even their persistence levels. Sometimes within another 6 months, the economy will start booming, but in some cases, even for 5 years, the economy may not start booming anymore. All these things are very much possible as a part of the business cycle. So this is how we typically observe the business cycles. Then, how will the impact of the business cycles be on various things? Let's say, from a production standpoint, let's look at the kind of a inventory turnover ratio, or the reverse of the inventory turnover ratio, where we are looking at inventory to sales. What will happen in this? If in case of expansion, the inventory levels will go up drastically, right? People want to sell more and more, so they want to produce more and more, right? So when we are in an expansionary phase, at the beginning of the expansionary phase, and as you are moving more and more deep into the expansionary phase, there is a lot of hope that we can sell too many items. So obviously every company wants to stock more and more of the inventory, because it wants to produce more and more, sell more and more. So it purchases huge raw materials. So the inventory to sales ratio will actually go up. But once a recessionary period starts, that much inventory is piled up, which will have a negative impact on the company. So even in a regular scenario, you might have observed this. So companies, they increase their production levels left and right because the economy is in a boom. Right? They double their capacity, they double their production, they double their customer. They want to grow at a very exorbitant rates. So for that, they increase their production to a very large extent. But within this process, what happens? Suddenly, when the economy stops growing, this entire thing will get piled up as an inventory, which will have a very negative impact on the growth of the company, because sales will come down drastically. In a recessionary period, sales will come down drastically, and the companies will face a bigger problem in terms of disposing of their inventories. Increase near the end of contractions, where sales begin to accelerate. Towards the end of the contractionary period also the same thing will happen, because towards the end of the contraction the boom is going to start. So from that period onwards, the company's inventory is going to, now they are hoping more and more positive. So sales are growing up, which will result in the companies again showing some kind of a positive sign about the future. Similarly, hiring and laying off, even this, if we see during a very recessionary phase, you will find very heavy layoffs starting off. So firms are slow to lay off employees in early contractions. They don't even know that the recession period has started. Even a very better example in our 2008-9 scenario itself, when the recession started, immediately no layoffs have happened, which means they are slow to lay off employees during the early contraction phase and slow to add employees during the early expansion phase. Now they don't even know whether the economy is booming. So initially they don't add employees. Once they are fully confirmed, yes, the economy is now in a growth phase, they typically start adding more and more people. Otherwise, But if we are somewhere in the middle, in the expansionary phase, we are in the middle of the expansionary phase, they recruit more and more people. Or if it is in the middle of a recessionary phase, if the recessionary phase is still continuing, they would like to lay off more and more people. Same thing happens with the capital also. Firms use physical capital heavily during expansion. They invest left and right in machineries and everything during the expansion phase. They even invest in new capacities and all those things, especially under the assumption that the expansionary phase is still going to continue. But during the recessionary phase, they use only their existing capital. They don't want to expand very drastically, no new branches, no new machines. They don't want to expand that greatly during a recessionary phase. These are some of the things what we see during the business cycle, the kind of impact they will have on the labor, the kind of impact they will have on the various other resources of the company also, or even the country also. Now, there are different theories governing this business cycles. Right? Different people have given a perspective of business cycles in different manners. There is a group of economists called neoclassical, modern day economists. They are making a simple statement saying business cycles are temporary and they are always driven by changes in technology. Probably we can correlate very much with this statement. Right? If the technology is a new booming technology, probably a few years back when internet has arrived, right? Suddenly we have seen huge booms coming up because of the new style of marketing, internet blah blah blah, a lot of things coming with respect to the internet. Now, if that internet technology has become outdated now, you will see that the economy will go into a downside. Now something else has to come which will again take the economy up. Now mobile phones, smart apps, blah blah blah, a lot of things. If they are the replacement to the typical traditional internet, which means a new technology has come out, which is again carrying the economy to a boom kind of a phase. So as per the neoclassical